Good morning everyone, welcome to an episode of Mizuho Week Ahead. I'm Boon Heng, market economist at Mizuho Bank. This week's theme is Mega Deals and Asia's Upsized Threats. Another week has passed and markets appear no closer to a US-Iran deal after multiple false dawns. Even as US President Trump touted that talks are in the final stages, Hezbollah's rejection on the conditions of a ceasefire compounded onto incessant conflicts in Lebanon. Risk sentiments frayed, with slippages at the cryptocurrency corners and semiconductor segments. Buoyant earnings was unable to meet even loftier expectations. Worries over tighter liquidity surfaced, with upsized equity fundraising from Alphabet at US $84.5 billion highlighted the intense capex spending amid the AI's arms race. A $75 billion offering for SpaceX IPO in the week ahead, with a valuation of around US $1.77 trillion, will drive significant two-way volatility as AI computing needs overwhelm satellite-related cash flows. Last Friday, risk sentiments took a beat, with the Nasdaq sinking 4.2% from a higher-than-expected NFP print in May, which came in at gains of 172K jobs alongside an upward revision of 93K for the prior 2 months. This likely reshapes thoughts around the labor market and implications on monetary policy. Markets repriced odds of a Fed rate hike with a bear steepener of the USD yield curve, as front-end 2-year yields soared 10.4 basis points, while 10-year yields rose 5.4 basis points. On the policy front, Fed officials continue to sound somewhat divergent, with Mary Daly and Tom Buckin sounding more cautious at events at the end of the week, while Lori Logan said that she is concerned on the need for higher interest rates later in the year. Mary Daly highlighted that we just have to wait for the economy to evolve, while Tom Buckin said that there are little signs of renewed labor market strength. On the US-Iran war front, there is hardly any clarity, especially with Iran firing missiles at Israel just this early morning. Regarding the attack, Trump said that Iran shot your missiles and that's enough. He also said he will call Israel Prime Minister Netanyahu and tell him not to retaliate. With the Israeli Defense Forces vowing to strike Iran with force as soon as the green light is given, it highlights the utterly binary risk of the current situation. In Asia, FX stresses remain in abundance. The Korean won underperformed amid strong foreign selling from equities. The ringgit also underperformed on potential political concerns, with Johor state elections signaling potential tail risks of instability for PM Anwar's government. Inflation stresses were also evident in yet another round of CPI prints in Asia. In the Philippines, even as headline inflation moderated to 6.8% year-on-year in May from 7.2% in April, core inflation rose to 4.1% from 3.9%, reflecting broader cost pass-through and begs the need for further rate hikes by the BSP, which in turn backstopped the peso. In Korea, both headline and core inflation prints accelerated to affirm impending rate hikes by the BOK in Q3. Similarly, Indonesia also saw rising headline core inflation, with the extent of increase being flattered by the petrol price ceiling. With the harvest season set to end in Indonesia, food inflation woes are unlikely to fade in the near term. In Vietnam, headline inflation edged higher to 5.6% year-on-year, while core inflation was steady at 4.7%, with month-on-month inflation momentum evident across the CPI basket, ranging from recreation and culture, apparel and footwear, to the cost of eating out. The bulk of inflationary waves will be keeping EM Asia central banks on their toes, with a readiness to hike rates or at the very least intervene in FX markets. In India, the RBI kept rates unchanged last Friday as they upgraded inflation forecasts but downgraded growth forecasts. Governor Malhotra signaled worries about the adverse impact on growth from supply chain disruptions. The RBI though was not complacent about the rupee, as they sought to improve inflows by introducing a slew of measures, such as removing taxes on foreigners' investments into sovereign bonds, and removing limits on short-term investments. For the week ahead, the ECB is expected to raise rates on the 11th of June as inflationary pressures become increasingly evident in the data. That said, ECB officials are unlikely to embark on a hawkish turn as growth risks remain. In Asia, we expect growing divergence between regional FX as well as across asset classes as the US-Iran conflict drags on. All in, even as deal-making prospects highlight the buoyant liquidity situation, markets may inevitably suffer from bouts of doubt about AI productivity and profitability, even as one may acknowledge the tech advancements. Crucially, the upcoming US CPI print on 10th of June may inject further volatility on intense assessment of the cost pass-through of the energy price shock. For more information, please refer to our week ahead publication or contact your respective sales desk and RMs. And for regular notification on our market views, please subscribe to our channel and hit the notification button. Thank you.